Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Weekly for Saturday, October 3rd, 2020. And our top story today, the growing burden of retirement. Well, joining me now to discuss this and more is Dan Doonan. He's the Executive Director for the National Institute on Retirement Security. Dan, thanks so much for joining us on the program this morning.
Yeah, thank you, Jeff. I really appreciate the opportunity to be here with you.
Well, look, you and the folks at NERS always do great work. And in fact, you just issued a recent report, I think it was on September 8th, about some pillars, some principles to strengthen retirement security. Because Dan, look, we're all impacted by this COVID pandemic. And my fear, and I think a lot of people's fear, is that it really has had a detrimental effect on many Americans' prospects for a safe and financially secure retirement.
Yeah, that's right. I'm happy to share and talk about our new report with you. It's called The Growing Burden of Retirement, Rising Cost and More Risk, Increased Uncertainty. And the bottom line of the report is that retirement is an unsolvable puzzle for far too many Americans today. And I do think the findings are more important given the unprecedented economic and healthcare crisis facing us today. With COVID-19, we're seeing unemployment remaining high, a large wave of evictions, and millions of people facing reduced hours, which are pushing people off course financially. So we think the report is timely.
Yeah, I couldn't agree more. And I took a look at the report and some of the findings. I mean, you mentioned it. So retirement is not just, hey, I got this nest egg and I'm done and I check out. There's healthcare. You mentioned living expenses, there's renting, there's car payments, things that you're going to be responsible for in retirement. And now with unemployment being so high, it has come down, but it's still relatively high relative to where it was. A lot of people don't have the means to even pay off some of their current obligations. How can they even save for retirement?
Yeah, I think that's right. I think this pandemic is really pushing people off course financially. And we knew Americans weren't on track when it came for retirement anyway. And, we feel like the outlook is worsening, both because of the current situation, but also these broader trends. When we look at housing, healthcare, long-term care needs, which I think are often not thought about enough, it's making all these major trends are moving in a direction that's making retirement much more challenging.
Yeah. I think you're right. Dan, the report lays out some really important principles, I think 4 principles or recommendations, suggestions. And I know a lot of policymakers out there listening, watching the program, you're clearly interacting with many of them. What are some of the takeaways? What are things we need to be doing in this country to strengthen retirement security for these individuals?
Yeah. I'll start with long-term care. I think it's a really interesting one. And like I said, I think it gets less attention. About half of seniors will never face long-term care. So, for a lot of the population, this is not a big issue, but about 1 in 7 seniors will face over $250,000 in care costs. And we're talking about people with Alzheimer's, dementia, some of these really challenging diseases later on. And when you compare that level of cost with the level of savings that people have amassed for retirement, and you realize that it usually comes pretty late in retirement. A lot of those costs are felt and hit in your 80s. So it's a big cost that comes late. And in our office, when we're working on this report, we often talk about it as sort of being the inverse of the lottery, right? The incident rate isn't really high, but the financial consequence is really massive. So one of the recommendations we had as far as building better retirement infrastructure is to look at long-term care, find some ways to use risk pooling, and to actually have more of a forward-looking plan to deal with long-term care costs. And we talk about Washington State. They've actually done a program and put one together to start working on this problem that we think is really interesting.
Yeah, look, I think, and we can learn from other states. I mean, states are the laboratory of democracy. I forget who said that quote, but I'm going to quote that right back. And they're not only the laboratory for democracy, but they're laboratories for great ideas. And we look at what some of these state run auto IRA programs, right? I mean, you have Cal Savers and Oregon and Chicago and many others, and they all learn from each other. So I would tend to agree. What else should we be doing in order to strengthen retirement security for all Americans?
So another thing that we talk about is improving lifetime income options. You know, in addition to all the challenges during the savings stage, and how do you get to where you need, have the resources you need, once you get to retirement, which, as you mentioned at the beginning, we talk about this as being the starting line for retirement, not the finish line when you retire, right? 20% of healthy females age 65 will live less than 9 years or more than 33. That's a whole lot of uncertainty right there.
Yeah.
And in addition to all the investment issues getting to retirement, getting $10,000 of life income, the price of that is up today because of the low interest rates, right? So you have all these different variables. And we really feel like for the people who are saving and have accumulated savings, having better options and finding better ways to do life income is incredibly important. And it will make some of these self-driven investment retirement plans much more user-friendly for individuals. So we think that's really important. I think when you look at how we did annuities in the past, a lot of those regulations and practices were put into place when interest rates were 7, 8, 9, 10%. And today with 10-year treasuries below 1%, it's really hard to see how retirees can generate safe income given the range of volatility just on longevity alone.
Yeah, and look, I go back to the benefits of a defined benefit plan. One of the great things about DB plans in their heyday is that they had a predictable amount that you would receive upon retirement. And you made the point, in a self-directed retirement plan, like a defined contribution 401k, 403b, governmental 457, that doesn't exist. And I think one of the things that we're struggling with as an industry is how do you create, for lack of a better term, that predictable pension-like amount at the end of retirement. I think many in the industry, with the Secure Act, many in the industry are trying to put something together there to fix that.
Yeah, we think it's an incredibly important problem to solve. And I think there's a lot of good ideas out there. I know a lot of the industry groups are looking at this. I think it's a good thing. Our concerns are that these products will have good value, right? And be a good deal for individuals. But we're really struck by, when we do our public opinion research, we see that people value life income. They tell us it's an important feature of a retirement plan, but yet we see very few retirees buying life annuities, right? So there's sort of this difference between what people are saying and what we're seeing behavior-wise. And, I think in some level, having options in a 401k plan to stay in and take a lifetime income option, there's less friction there between the want and the being able to do that. We see developments in this area as being really important. In truth, this is sort of a middle class or an upper middle class and above solution because so many people don't have the savings.
Yeah.
And that's why we talk about Social Security as well. But, I think that would go a long way. Finding good lifetime income options would go a long way towards making the whole system more user-friendly.
Dan, we've got about a minute left. I mean, is it kind of a two-pronged approach here? One is to inform policymakers, inform key stakeholders within the retirement system, but also is part of this educating people. We talk often in the industry about financial wellness, financial literacy. Do we need to do more of that in order to meet this objective of getting people to a place where they have a secure retirement?
Yeah, and we hope our work helps in that regards. I think there's some limits. We want things, in my view, we want people to go into a workplace and not have to jump through a lot of hoops and be in a workplace plan in addition to Social Security. And the more behavioral barriers, I think the worse off we are. But I do think the education component is important. I think talking to people about the value and where we are is important, because I think if you don't have that background information, you might say, well, everybody else is doing this, right? And then you're comfortable doing it as well, if it's the right thing or not. So, yeah, I think we want to be a part of that education. We want to talk about some of these risks that people might face, and contribute there. But I do think policymakers, across the board, have a big role in saying this is important, right? In our polling, we hear that this is an important issue for people. And, taking no action, doing nothing to make things better, we feel like is a choice, just as you would be taking an action.
Absolutely. And it's credit to you and the folks at NERS again for the great report. It's thought leadership like this that helps make this part of the national conversation, and we need to do a lot more of this. Dan, always a pleasure chatting with you. Thanks so much for joining us on the program, and we look forward to having you and the NERS team back on the program very soon.
Thank you, and thanks for the great work you've been doing. Appreciate it.
Thanks, Dan. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as one day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. On Monday, I sat down with Delphi Digital's Kevin Kelly to discuss some of the big mistakes that many crypto traders make. Let's take a look.
Yeah, I think one of the things that we try and focus a lot on, obviously with a new, niche type market, one of our big focuses is the education aspect, right? So not only, how to look at these things and potentially how to invest in them, but also what this industry is building, how it kind of relates to the broader crypto space, depending on what the project or the sector is. And then what I think is really important that we're trying to also bring, or I could say bridge the gap for both the crypto native investors as well as traditional investors, is bridging the gap between what happens within the crypto market and what happens outside of it in the more kind of macro, from a more macro lens. Because what you're seeing, and I think the last couple of weeks is a prime example of this, you saw kind of a parabolic rise in equities. We've talked about this on your show before. You had this kind of risk on rally. There was a lot of speculative activity going on, coincided right with a lot of speculative activity going on in the crypto markets. We saw a really big kind of run up in what we consider the DeFi sector, the decentralized finance sector. And now, what you've seen over the last couple of weeks with the kind of deflation, I guess you could say, within broader asset prices like stocks, you've actually seen crypto prices come down as well. And so it's not to say that the two are perfectly correlated, one to one, but certainly one of the big themes that we try and hit on or try and convey to clients is understanding what happens in the broader macro lens to put some context around why crypto assets, both at the top of the funnel with Bitcoin, but also further down the smaller crypto assets, why they may be reacting the way in which they are. So that's probably number one, just having a kind of broader sense of what's going on in markets to the best of your ability. The second is also to understand, when you look at, these different assets, there's a lot of different nuances to each of them, right? So not only just kind of their liquidity profile, which basically means, if you see a crypto asset really start to run up, well, if there's only a limited amount of trading volume and it's not really a very liquid market, then you can consider that really just kind of paper gains, right? Because you can't really exit those positions in mass. So understanding the liquidity profile of some of these things, there's a lot of really great data trackers out there now where you can actually see the underlying kind of order books for some of these crypto assets. And then I think just trying to, from a psychological standpoint, not getting too far ahead of yourself, right? It's very easy, and we know better than anybody, when crypto assets when the crypto market really starts to run, it's almost like this very high intensity euphoric type feeling, because some of these crypto assets have doubled, tripled, or even gone up 5 to 10x. And point being, don't be afraid to take profits at a certain point when you've if you're fortunate enough to make a large killing on some of these, because again, these things are cyclical, they move in cycles. And what we're seeing now is a lot of these crypto assets that really ran up the last couple of weeks, over the last, call it 2 or 3 weeks, have come down, some by 40, 50, even 60%. And again, these are just the kind of ebbs and flows of a new market, right? You're going to have those euphoric periods. You're going to have those periods in which a lot of sentiment and a lot of leverage is kind of taken out of the market as well. So again, we're not traders by nature, but if you are looking to invest in these things and you have, for whatever reason, a sizable crypto portfolio that you've been able to accumulate, definitely think that having the discipline to know kind of when to cut bait and when to take some profit on your winners is also extremely important in a market in which momentum and sentiment is one of the kind of driving narratives or catalysts for prices. Yeah, so I mean, if you're really looking to trade or just invest in, again, top of the funnel, Bitcoin, maybe even Ether, native asset of Ethereum, something as simple as a Coinbase, allows you to do all of that, right? Some of the transaction fees aren't exactly the best, and so I would say for those who are kind of in the more buy and hold mentality, something like a Coinbase account is very simple to set up, links right up to your bank account, and is very intuitive and very easy to use. And they also have some good educational material on there. When it comes to getting exposure to some of the other, we'll call more esoteric kind of crypto assets, that kind of depends on the exchange, right? And one of the things that the crypto market is still a bit plagued with is the just kind of fragmentation of the different exchanges and the liquidity, right? So a certain asset may be trading on one exchange and not on another. And so you have to use specific exchanges to be able to get in and out of or to get exposure to some of these smaller crypto assets. But if you're really just kind of focusing on the Bitcoin and the big kind of, we'll call them the mega caps of the crypto world, something like a Coinbase is I think more than enough for people to get started, especially in years in which you do have these type of, we'll call them mini bubbles, because I don't think anything that's happening right now is akin to what we saw in 2017 with that massive run up in prices. But I do think it's something really important, because that is something you need to take into account when you're buying and selling these different assets. And what's great is that now, as this market has evolved, you now have a number of different services like Luca Tax, LUKKA Tax, or Token Tax that actually allow you to hook up your exchange accounts to their internal systems to basically allow you to track the potential taxable to your tax bill much easier, right? So you're not, the old days, I'll call them the old days, but only a couple of years ago, you're sitting there basically with an Excel doc and you're trying to track this stuff on your own and knowing where your transactions are, download all that information from these exchanges, there's a lot of products out there nowadays that make it a lot more simple for you to use. But at the same time, to your point, it's something that's it's going to become even more top of mind as we get closer to year end, obviously. But it's something people should certainly start thinking about now.
And on Wednesday, I sat down with Inkberry Financial's Megan Scipione to discuss some tips for open enrollment. Let's take a look.
Sure. Well, so, Jeff, there are studies that show 83% of people spend 1 hour or less looking through the benefits offered during open enrollment. And furthermore, people would rather go to the DMV, would rather file their taxes, hold a screaming baby, than review their wellness benefits offered through their employers. So it's something, I think the reason that people are not spending time on it is that they lack confidence. They don't know that they're going to choose the right benefits for them and their families. And then they're opening themselves up to the potential for regret later on. And the thing is, you are locked into your benefits for a 12-month period until the next open enrollment, unless you have a significant life event, as you mentioned, if you got married, if you had a baby, a change in marital status. But the thing to remember is each year, you're facing a unique set of circumstances. Your next 12 months may look different than your prior 12 months or prior 60 months. So it's really, really important to take the time to look through the benefits that are being offered. And more employers now that more than ever are offering a lot of helpful information to go along with it, brochures, videos, support groups that kind of help give employees the sense of that they're going to make the right decisions. Now, really important is that for married participants, married employees, they should really be looking at the benefits not only that their company offers, but that their spouse's company offers as well. It's really important to do this together. It's really a team sport. And I think one thing that's kind of hyper-focused folks on this is the coronavirus pandemic and the need for people to kind of be looking at their finances, looking at their wealth accumulation and thinking about the protection benefits that they have available to them, either offered through their employer or maybe that they need to purchase on their own. Maybe this is the here. And I'm so glad that you mentioned health savings. HP. And more companies are offering these high deductible health plans because of the economic value both to them and to the employees. There are some folks that are that choose high deductible health plans, but then do not open up the corresponding HSA account. And that's really where I'd like to focus attention. For any of your listeners that are in an HDHP, it's really critical that they open up that HSA to go alongside it. There are many benefits to the HSA account, the health savings account. They basically have triple tax benefits, and the amount of money that you put in there and that grows over time is never forfeited. That's a big misconception with the HSA. Folks are getting it confused with the FSAs, the flexible savings accounts, which you have to use it or lose it by the end of the round or the end of the benefit period. But the HSAs, this is something that if you started an HSA now and you were able to have it grow over time, that's something that you could be using in retirement. This is such, I think, an untapped benefit that's offered in the workplace. If you think about after you retire, most of us will not have retiree health provided by our companies. That's a benefit that's long in the rearview mirror. So if you could start now at 30 or even 40 or even 50 at any age, start putting some money aside into the HSA, have it invested as you've suggested, you can use that in your older years when you potentially are going to have healthcare expenses upwards of $2,000 per month.
Yeah.
Many people, $2,000 a month, that's a mortgage-sized payment that you'd be making for your health care. So it's really, if you do have that available, this is a really terrific product to give additional consideration to. Most people need life insurance. If you're over 18, you need life insurance. There are some exceptions. For example, if you become self-insured, or if you truly don't have anybody dependent on your income, but there are very few people that fall into those categories. And so Life insurance offered through work is a good option, specifically for people who may have trouble getting life insurance coverage due to a health concern, either a current or prior health concern. And sometimes age makes it difficult to get a life insurance policy on your own. And in that respect, it would be a good idea to go with the workplace term life insurance that's offered. For folks who are healthy and can get a policy on their own, that's really what I would recommend to my clients. And the reason for that is that the policy that you purchase on your own stays in effect regardless of your employment status. So there's nothing worse than working with a client where potentially the person has become ill, has to stop working, of course, loses their life insurance benefit. And then it turns out that the illness is something far more serious and they're not able to get coverage. So it's really best to have the coverage on your own. You can use an insurance marketplace. There are several of those that make instant quotes available. And term life insurance is really one of the most affordable ways to protect your income and protect your family. I want to put a plug in for folks to consider life insurance who maybe would think that they're not good candidates for it. And these are folks who are young, maybe 20s and 30s. They do not have children or a spouse, but they have student loan debt. And no emergency savings. And the reason for them to have a small policy would be to cover final expenses. There's nothing, you wouldn't want to have to leave that to your family. So having a small policy to take care of those final expenses would be a good idea.
Well, certainly great segments. I want to thank all of our great contributors this week. Awesome shows. And that wraps up this episode of BRN Weekly. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out our daily newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for BRN Sunday, where I'll be joined by members of the media, academia, and financial services as we analyze all the news in retirement, markets, technology, personal finance, so much more. You're not going to want to miss it. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.